Hey guys, welcome to this video. Don't forget to get my free training, and you can also join my live trading room daily with a link underneath. We just finished a 3-hour session. So oil, you've got oil moving now to fear coming into the market. Okay, people are getting worried about what will happen to oil due to global tensions. Essentially, that's what's driven the price up. You opened much higher, right slap bang in line with this key higher 100 MA. Okay, flick to your weekly, and you can see that on the overall supply and demand curve, if you like, you're still relatively far off from this most recent fall. And you can see the market overall in the long term is downtrending. Okay, that's because in the longer term, traders and investors are relinquishing their holdings on oil because it's become less relevant. Now, when it does become relevant is when you get an inflow of market sentiment. And at the moment, that's exactly what's happening. Okay, the pullback you're getting and sort of the kickback of the former move is seeing very early rejection at one of your early key moving averages, which is designated as the 20. Okay, normally you'll just touch that if it's a very, very strong uptrend. Now, as a value trader, someone who's looking for value at all times and highly probable entries, I let the market move and do its thing. The spot between the 20 and the 40 MA is always very ideal for that if you're trading, like I said, a trend, for example. If you swapped your daily, you can see there's clearly daily support there, which is very, very key. Stock oscillator or your RSI, whatever you want to use, still very high up. So we're not really interested in going crazy buying it because we know the price really hasn't fallen too much, even if it comes to that point. Okay, so just beware of that if you are interested in buying there. But that is an ideal long zone, in my opinion, especially given the gravity of what's going on. I would say after you touch that, your target really is getting nearer sort of $80, comes in line with key resistance you can see here and candle wicks. Okay, whether you take gains before that, if it gets there, is really your call. The pullback you can see at the moment is getting halted by reasonably early candle wicks, so it's okay really to take long. But if you're really, really after value and that's all you want, you could wait until you get $76 per barrel if you do indeed get there, as sentiment wanes, impulse drops, and people don't rush to get long as quickly, essentially. Now, I mentioned it before. I said I wouldn't be completely shocked if we rose up from here. You can see what happened was it slowly gained momentum. Okay, it went from going sideways to tentatively rising with higher lows as time went on. You can see that right there. Okay, and that's exactly what you've seen. And now it's come above your moving averages and spurted up. So like I said, maintaining that market sentiment, pulling the market along, a drop back to something like this is very, very reasonable for swing longs, in my opinion, and an area that I would take for that reason. If you swapped your weekly, like I said, your targets are much more clear. I probably wouldn't consider shorting unless you get really, really far up along. And I'm talking nearer $92. It would need a big, big, big push for that to occur. If that happens or not, obviously is yet to be seen. But that is an ideal spot, really, for oil for me. If you wanted to scale in short, could consider maybe lightly halfway through, just over $80, because you do have sort of medium level resistance, medium level probability resistance. You can see people have taken their orders out of the market there previously, therefore they may indeed do so again. Okay, now if you were short in line with this target up here, then you would still be sustaining that downtrend, but oil is very susceptible to quick market sentiment changes, which you obviously need to be very careful of. Okay, if it does become the level just before that, then of course that may be ideal as well. Okay, that's about round here, so it would be something along these lines. Okay, it's never exact all the time with trends, but you may find that. But for me personally, if you're risk averse, hold off till short's much higher and forget the mid-level, but you could exit longs if you do get a bounce from that key label support. You can just about see it on the weekly as well, and that moves you to the upside. If that occurs, really you want to start looking at profit taking as time goes on. But like I said, very susceptible to sentiment. Doesn't look like it's easing particularly, unfortunately, at the moment. So just be aware of that. Thanks for watching, guys. Don't forget to join my trading room underneath. live on charts every day. Thanks for watching. See you in the next one.